To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Let's now quickly revise FCRA. So we started with the applicability of the Act. The Act is applicable to whole of India, citizens of India residing outside India, or any associations or body corporates which have been incorporated in India but have a place of business outside India. And this Act came into force on 1st of May 2011. Then we have understood several definitions under this Act, wherein the first definition which we understood was of foreign contribution. What is foreign contribution? DDT. Donation, delivery, transfer of what? Article, currency or security, whether Indian or foreign. And in case of article, there was an exception wherein the article received is in the form of gift for personal use and the market value of such gift does not exceed 1 lakh, then it will not be considered as a foreign contribution. And in case any article is received as a gift for personal use from a relative and the amount exceeds 1 lakh, then an intimation has to be filed in form FC1 with the central government within 30 days of receipt of such article. After this, we've also understood certain explanations given to the definition of foreign contribution, wherein there are 3 explanations. The first explanation talks of any amount of foreign contribution received by one person transferred to any other person, then in the hands of that other person also it will be treated as foreign contribution. Then we have understood any income arising or interest accruing on the foreign contribution received or income arising because of the foreign contribution received. All of the income and the interest will be referred to as foreign contribution, shall be deemed to be foreign contribution. But yes, there are certain situations wherein FCRA shall not apply, that is, we will not treat certain receipts as foreign contribution, wherein we have understood any fees which is received shall not be treated or any cost which are being incurred in the ordinary course of business also shall not be treated as foreign contribution, and any amount received as an agent also shall not be treated as foreign contribution. After this, we have understood the definition of foreign source. What does the foreign source include? It includes government of a foreign country. It also includes the international agencies. It includes foreign companies and any trade union, international trade unions which have been established. Any MNCs, any trust or foundation which have been incorporated outside India, any society, clubs which have been registered in or incorporated in a foreign territory, and any citizen of a foreign country would amount to a foreign source. Wherein we have also understood the definition of foreign company, wherein it not only includes a foreign company as per section 2 clause 42 of the Companies Act, but also the foreign companies as referred to under section 379 of the Companies Act 2013, and it not only includes companies but it also includes associations, bodies of individuals as well. And after this, we have also understood what is a political party. And then we started with section 3, wherein we have understood who are the people who are prohibited from receiving any foreign contribution. So who are the people who are prohibited? Candidate who is contesting for election, any cartoonist, correspondent, editor, publisher of newspaper, as well as any cartoon editor, publisher of any audio visual or audio news or a news channel which is broadcasting current affairs. So even correspondents, editors, publishers of those news channels are also not eligible to receive any amount as foreign contribution. Then member of any legislature is also prohibited from receiving any foreign contribution. Then any public servant, judge, government servant, they are also prohibited. Any organization which is an organization of political nature, political party or office bearer of political party, any association which is indulged in broadcast of audio news, audio visual news and current affairs, then they are also not eligible to receive foreign contribution. So this was under section 3 subsection 1, wherein we have understood who are the people who are prohibited from receiving any amount as foreign contribution. But yes, we have also seen certain exceptional situations wherein these people who are prohibited will also become eligible to receive foreign contribution, and this was given to us by section 4. Wherein we have understood that if any person is receiving any amount as foreign contribution by way of salary or fees or remuneration for the services which he is rendered, then in that situation he will not be prohibited from receiving any amount as foreign contribution. Also, if any amount is received in the ordinary course of business, then that will also not, in that situation also the prohibition would not apply. The next exception was when the amount is received as an agent of foreign source. Then in that situation as well, the prohibition will not apply. Any amount being received from a relative or in the form of scholarship, stipend, then in that situation as well, the prohibition will not apply. Then any remittances which are received from any foreign country and which are as per the provisions of FEMA, then in that situation as well, it will fall under the exception. And in case there's any gift which is being received for personal use, in that situation as well, this prohibition will not apply. After this, we have also understood section 3 subsection 2, wherein we have understood that in certain situations, a person who is resident of India or citizen of India residing outside India, if he is receiving any foreign currency, he should not deliver that currency to any person who will in turn deliver it to any political party or a person who is prohibited under section 3 subsection 1. And apart from this, a person who is resident of India shall not deliver or give this currency to any person who he knows that whom he believes to know will give the currency to a political party or a person who has been prohibited under section 3 subsection 1. And this also applies to a person who is a citizen of India but is resident outside India. And we have also understood, if any person is receiving any amount as foreign contribution on behalf of any other person, then in that situation he shall make sure that he is giving that amount to that person on whose behalf he has received it and to no one else. So if you remember the examples of Mr. Shroff which we had taken here, so in a situation wherein a person is receiving any amount on behalf of someone else, then he has to make sure that he is giving this amount only to the person on whose behalf he has received the amount. Then under section 5, we have understood that the central government has the power to notify certain organizations as organizations of political nature. And we've also understood the situations, the guidelines wherein the government would declare an organization as an organization of political nature. And whenever a government wants to declare any organization as organization of political nature, the government will first have to inform them by giving them a notice that we intend to declare you as an organization of political nature. And the other party has powers to make, the other party can make representations to the government as to why they should not be declared as an organization of political nature. Now, apart from this, the government would also involve any other person who would make a report and make representations, and on the basis of that, the government, by giving a notification in the official gazette, will declare a party as an organization of political nature. After this, we have understood the concept of foreign hospitality, wherein any person receives some unusual treatment from foreign countries on a foreign visit. It could be in the form of free cost of travel or free boarding, lodging and medical treatments. So in that situation, if any of the persons who have been categorized in section 6 want to receive any foreign hospitality, they will first have to seek prior approval of the central government. And who are the persons who are categorized here? Member of any legislature, office bearer of political party, employees of any organization which is controlled by government or a government company, government servants, judges. These are the people who, if they want to accept any foreign hospitality, they will have to seek permission from the central government. And there is an exceptional situation which arises in case of sudden illness and emergency medical treatment is provided. Then in that situation, any prior approval is not required, though they will have to intimate the central government about the manner in which foreign hospitality was received, the source, etc. Within 1 month from the date when the foreign hospitality was received. And this intimation is not required wherein the cost of the medical aid does not exceed rupees 1 lakh. And the process of seeking prior permission is basically the person who wants to receive foreign hospitality, he'll first have to make an application with the central government, basically the Ministry of Home Affairs, and in that application shall be supported with the invitation which is received from the host country. And in case this trip is being sponsored by any particular ministry, then clearances of that ministry shall also be accompanied along with the application which is made to the central government. This application has to be made 2 weeks prior to the date of onward journey. That is, from the date of journey, at least 2 weeks prior, this application has to be made to the central government, and all the details shall be given to the central government. Central government, after receiving the application, will decide whether they want to give the prior permission or not. So with this, we completed the topic of foreign hospitality. Then we went to section 7, wherein we have understood that any person who is receiving any amount as foreign contribution shall not transfer this foreign contribution or foreign currency to any other person. So foreign contribution received by one person shall not be transferred to any other person. Section 7 strictly prohibits it. Then under section 8, we have understood that any amount of foreign contribution received shall be utilized only and only for the purposes for which it has been received, and not for any other purposes. It cannot be used for speculative activities, and also cannot be used for administrative purpose. But yes, there is a slab rate which comes here. The foreign contribution received, up to 20% of it can be utilized for administrative purposes, and in case any entity wants to utilize more than 20%, they'll have to seek prior approval of the central government, and only then they can do so. And then we have also understood what are the expenses which will be treated as administrative expenses, and which expenses which will not fall under the category of administrative expenses. Then under section 9, we have understood that the central government has power to prohibit receipt of foreign contribution in certain situations wherein it has prejudicial impact on the relations with foreign country, the public interest, or harmony between different religions, religious groups, linguistic groups. So these were certain situations wherein if receipt of foreign contribution would prejudicially affect any of these situations, then the central government has a power to prohibit any person, any party from receiving any foreign contribution. And then under section 10, we have understood that when the central government is of the opinion that any article, currency, or security has been received by a person in contravention to the provisions of the Act, then the central government can pass an order wherein they can restrain the person from delivering, transferring, dealing in any such article, currency, or security which they believe has been received in contravention of the provisions of the Act. And there are 3 modes we have understood as how the central government can pass the order. They can either give the order directly to the person or to his agent, or the second way is by registered post or speed post to the last known address of that person. And the third manner is they can affix the order on the door of that person, either the place of residence or the place of business, and this has to be done in presence of at least 2 witnesses. After completing section 10, we started with the topic of registration. Now, registration or prior permission is required if any person wants to receive any foreign contribution. 2 modes. One is they either obtain registration or obtain prior permission. And in case any organization satisfies the eligibility criteria, they will become eligible for registration. In case the organization is not eligible for registration, they can obtain prior permission and receive foreign contribution. Then we've also understood under section 12 subsection 4 3 master conditions. First master condition was with respect to the person. The second master condition was with respect to no prejudicial effect on certain situations, and the third master condition was receipt of foreign contribution should not lead to incitement of any offence or should not endanger life of any person involved. So if all these 3 master conditions have been complied with, then the central government will grant registration or prior permission as the case may be. And we've also understood that the application of registration shall be made in form FC3A. For prior permission, the form is form FC3B, and the central government will analyze the application. They may either accept or reject the application. In case of acceptance, within 90 days, they'll have to grant the certificate of registration. In case they are rejecting, they are not obligated to specify the reasons of rejection, reasons of rejection, since the RTI Act 2005 does not make it mandatory for the central government to give any reasons for rejection of any application. So application has to be made and has to be disposed of, and the central government will then decide whether to grant registration prior permission or not. Then under section 12A, we have understood that the application shall be accompanied with identity proof. Identity proof in case of Indian citizens is the Aadhaar, and for foreigners it is either the passport or OCI card. And after this, we have understood under section 13 how the suspension of certificate happens. Suspension of certificate usually happens in case there is any cancellation in any inquiry which is going on for the purpose of cancellation of the certificate under section 14. And the maximum time period of suspension is 180 days, and during the time the certificate is suspended, the party is not eligible to receive any foreign contribution, and also is not eligible to utilize any foreign contribution which it has received. But yes, they can utilize up to 25% of the foreign contribution received with prior approval, but with respect to the remaining 75%, they shall not be eligible to utilize that 75% of foreign contribution unless and until the application for suspension is revoked. Then under section 14, we have understood that there are 5 grounds of cancellation wherein a person has violated any terms and conditions of the certificate, or violated any provisions of the act, or he has not been engaged in the reasonable activities or the objective of the firm, or the objective with which the foreign contribution has been received for a period of 2 consecutive years, or has become defunct, or when incorrect or false statement was made at the time of grant of application, or whether central government is of the opinion that it is in public interest to cancel the registration of a particular organization. And during before cancelling, the central government will make an inquiry, and after being satisfied, they will cancel the registration. Once the registration is cancelled, there will be a cooling period of 3 years, and during that 3 years, the person cannot make an application for new registration or prior permission. And after this, we have understood in certain situations a person would also surrender the certificate of registration, and before accepting the surrender, the central government will make an inquiry and satisfy itself that no contravention has been made by this person. And once the central government is satisfied, the certificate, they'll accept the surrender of certificate of registration. And under section 15, we have understood that in case of surrender or cancellation of registration certificate, the property, the foreign contribution which has been received, or any assets which are created out of the foreign contribution received, shall vest in the hands of any banking authority. And it is the banking authority who will decide what to do with the assets and the foreign contribution which is available with them. Under section 16, we have understood how the renewal of certificate can be made. So for renewal, the application can be made within 6 months before the date of expiry of the registration certificate. So the registration certificate is valid for 5 years. The application can be made 6 months before the expiry of the registration certificate. And upon renewal also, the renewal of certificate will be done by the government only and only when all the conditions which have been prescribed under section 12 subsection 4 and all the other conditions are met by this person. And upon application of renewal, again, the central government has 90 days to either accept the application of renewal or reject the application. If the central government is of the opinion that the person has contravened provisions of the act, then they may hold the renewal and may not grant renewal of the certificate of registration. Then under section 17, we have understood the concept of FCRA account. So the main account has to be opened with SBI branch of New Delhi as specified by the central government, and that is the account where any foreign contribution can be received by the person. Yes, the person can open one or more different FCRA accounts in one or more different scheduled banks, but these banks are only for the purpose of keeping the money or utilizing the foreign contribution. The receipt of foreign contribution will happen only with the main FCR account, that is SBI New Delhi. And we have also understood no other deposit shall be made in the FCRA account, or the foreign contribution should not be deposited into any other account. So it has to be maintained in a separate bank account altogether. And under section 18, we have understood that the it is the responsibility of any person who has been granted with registration or prior permission to file an intimation in the form of annual return in form FC4 every year. This has to be filed within 180 days of the end of the financial year, stating the amount of foreign contribution received, how the foreign contribution was utilized, the purpose for which it was utilized, and the manner in which it was utilized. So all these details shall be mentioned in form FC4 and shall be accompanied with the income and expenditure statement, receipts and payments account, and the balance sheet of that particular party. And in case any article is received or any security is received, the form which has to be filed is form FC1. And in case there is no foreign contribution which has been received during a year, then a nil report has to be filed. In case a nil report is being filed, then in that situation no other statement is required, and this intimation which is filed in form FC4 shall be certified by a chartered accountant. And then we have also understood under section 19 that every person who is receiving any foreign contribution shall maintain a separate set of accounts for the purpose of foreign contribution which is being received, the manner in which it is being utilized. So along with the normal books of accounts which he is maintaining, he shall also maintain a separate set of accounts for foreign contribution as well. Then under section 20 we have understood in certain situations wherein the central government is of the opinion that some contravention of provisions has happened, or there's some violation of the provisions of the act which has been done, then they may appoint their officers, and their officers will come and carry on an audit, that is an inspection into the affairs of any organization. So section 20 basically talks of audit of accounts. Then we have understood that any candidate who is nominated himself for election is now contesting for election, and he has received any foreign contribution within 180 days prior to his nomination, then he'll have to give details of such foreign contribution received and the purpose for which the foreign contribution was received by him. And this information shall be filed in form FC1 by this person within 45 days of his nomination as a candidate for election. Then we have also understood that the assets which have been created out of foreign currency, they shall be disposed in certain situations, and the disposal would happen as per the instructions of the central government by the banking authority. In certain situations wherein the registration has been renewed or a cancelled registration, a person whose registration was suspended or cancelled has now again got registration under the act, in such a situation the assets would be returned to that particular person. And after this we started with the process of adjudication, wherein first we have understood section 25 wherein seizure is possible. Now once seized, what will happen with the foreign contribution? Then in that situation what will happen, under section 29 adjudication will happen. It will be adjudicated either by the court of sessions without any limit or by the assistant sessions judge, where the amount does not exceed rupees 10 lakhs. Now it is either the court of sessions or the assistant sessions judge who will decide what shall be done with the seized article. So they may either order confiscation if they are satisfied that some violation has been done. So they'll order confiscation of the assets which have been created, of the foreign currency or the article or the security. And if they find out that no such contravention has happened, then in that situation they may order to deliver this article, currency or security to any person who is entitled to receive its possession. This was under section 29, which talks of adjudication of confiscation. And section 30 states that no order shall be passed unless and until a reasonable opportunity of being heard is given to the organization. After this we have understood the concept of appeals and revision. Appeal can be filed against the order of court of sessions or assistant sessions judge which has been passed under section 29 within 1 month from the date when the order is communicated, and this time period can be extended by 1 more month. If the order is given by court of sessions, the appeal has to be filed with the high court. If the order is passed by assistant sessions judge, then the appeal shall be filed with court of sessions within whose jurisdiction the seizure was made. Then we have understood there are three primary situations where an appeal can be made: wherein a person has been refused to grant registration, or in a situation wherein the registration has been cancelled, or in a situation wherein a person is aggrieved because he is being notified as an organization of political nature under section 5. In any of these three situations, the appeal has to be filed with the High Court within 60 days from the date of such order. After appeals, we have understood revision. Revision can be either done by the central government suo motu on its own, or on an application received by the central government from the party concerned. Now, when the central government is revising an application on its own, it cannot revise an order passed by it which has been passed more than 1 year ago, more than 1 year previously. And when an application is being made by any person to the central government, this application shall be made by the person within 1 year from the date on which the order was communicated to him, or when he comes to know about the order, whichever is earlier. So again, the person who is making the application also has 1 year, and within 1 year from either the date of communication of order or the date on which he comes to know of it, whichever is earlier will be the date which will be considered, and within 1 year of such date, this person shall make an application for any kind of revision in the order which has been passed by the central government. And after this, we have understood different offences and different penalties which are applicable in case of different offences. And we've also understood in certain situations compounding is possible. Now for compounding, it has to be done before the institution of any prosecution. It can be done for an offence where the punishment is not only imprisonment. If the punishment is only imprisonment, then compounding is not possible. And then we have also understood once an offence is compounded, the same offence or similar offence cannot be compounded for a period of 3 years. And once 3 years pass by, the same offence will be considered as a fresh offence. And once any compounding has happened, no institution of prosecution shall be done for that particular offence. And after this, we have also understood that that officers will have power to call for information during the time of inspection, and they also have the power to investigate the cases, investigate into the matters in case they are of a view that some contravention of provisions of the Act is being done.